Money makes the world go round, the world go round. Money makes the world go round. Well, hello. We're going to be discussing the exciting subject of money management. Let me make my coffee and we'll have a little discussion. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy trader. No shock when you look around my desk with all the toys that's on it. But I need my toys. I genuinely do. And if you watch some of the videos that I do, you'll understand why. So if you want to see all that's good about trading and see it in real time, please click that little subscribe button. Genuinely helps, and we'll crack on. So what are we talking about over coffee today? Well, as I was going through the comments on one of the recent videos, I asked for ideas of what you want to see. Just basic stuff, you know, like what's an RSI, support and resistance, all that sort of stuff. Because believe it or not, strategy is not what makes you profitable. A lot of it is just your planning and preparation.
Are you serious?
And within those videos, I saw a cracking comment from Wealth and Wellness. And it's money management, which, believe it or not, is one of your cornerstones of being profitable as a trader. Now, I know I've just said strategy and some ears would have pricked up. Pa-ding! Oh, here we go. Just going to show me where to get in, where to get out. Get me that green Lamborghini.
You ding-dong! Personally, I think you're a fucking idiot.
Yeah. If that's the part that sparked you up and you thought this was going to be your road to riches, you are mistaken. Although I will put a strategy on the board just to keep you happy. But if that's as far as you get into the video, I would suggest you stop your trading career right now, get yourself onto Google, tap in McDonald's applications and set your path on a different route. You see, strategy is probably the number one question that I get emailed about. Everybody wants to know how I do it, which is fine. Go to the Scruffy Squad and you'll see it. But a lot of the time they just ask without knowing anything about what they're doing. They really don't, because they think it's the be all and end all of trading. It's not. If you set a business up, it's the first thing that you do. You make a business plan. And within that business plan is your money management first. And why is that? Because the money management is what allows you to conduct business.
Isn't that logical?
And that's something I'm going to go onto the whiteboard and show you. Because believe it or not, wellness has stumbled onto a subject that is dear to my heart. I plan and prepare everything. I genuinely do. Nothing is ad hoc in my life. You know, it is meticulously planned. Sometimes you get it right, sometimes you get it wrong. But when you get it wrong, that section needs to be planned as well. That's why you hear me talk a lot about having 2 stop losses, because it's all part of a greater plan.
Okay, well, the mind's an amazing organ.
I've got an amazing organ.
It's capable of far more than you'd imagine.
Right again.
So what I'm going to do is, I'm going to jump on the whiteboard. Just to keep the strategy guys happy, I will show you a very, very simple strategy. And then I'm going to talk about the levels of money management. And I believe there are 5. Genuinely do. And that 5 has a hierarchy. And I'm going to talk you through it.
Well,
We're waiting.
Gotta have your coffee, guys. And let's be honest, we all know Scruffy likes a coffee. And he does, you bugger. And he certainly needs it at the minute. I think I'm hitting what's called burnout. I've done this channel coming up 2 years now. And I've pretty much done a video every single day in that 2 years. And it's had its highs, it's had its lows. And I think I just need a bit of a break. So coffee keeps me going. But what else keeps me going? That's the charts. It's the challenge of the markets every day. But why do I do it? Well, a lot of it is enjoyment, and I must admit I do enjoy connecting with a lot of you guys. You know, 90% of the time. There is an element that is, well, let's just say, not so nice.
Cheeky fuckers.
But the rest of the guys make up for that, which is why I continue, and it's what I do. But ultimately, I do trading and my job for one thing. Money. Because it's the one thing that we're all looking for. But the money is, how do I put this? For me, I'm at a level now where the money is less important because I've built the account. And it takes money to make money. And I know that sounds odd because you'll have seen the Lambo boys.
You ding-dong!
On the land of make-believe, or what you call Instagram, telling you they flipped £200 into a gazillion dollars in very little time. It's all bollocks. Absolute bollocks. Because I can tell you, not one of them is going to follow these principles that I'm about to show you. What they're very good at, and probably what I'm not very good at, is being cinematic. They will show you a beautiful picture, but that picture is nothing more than a fairy tale. In other words, you're chasing. A unicorn. They are beautiful, but they don't exist. So I said I'd start with a strategy. I want to give you the easiest one in the world. Simple. And it needs 2 candles setup and then a third, and it's called 3 candle play. Alright. So you will have a main candle. There. Doesn't matter what colour it is your, well, let's just call it a daddy candle, eh?
Who is your daddy and what does he do?
That's right. Who's your daddy? Well, a daddy also has a child. Daddy candle, child candle. And you're looking at that and going, how on earth do I get a strategy out of that? Dead simple, my friends, dead simple. There's the high of the candle. There's the low of the candle. Now the next part is the third part of the 3 candle play. You are looking for a break, whichever direction. In this case it's gone short, and that is your play. How does it work? Very simple. Once you've established that you've got a dad and a child, or a parent and child, because apparently we're in a modern world now, and you're not allowed to say daddy without including mammy. I hate all that. It's crap. It's never going to happen on this channel. Daddy candle. You put your order on the other side and your stop up there. Simple as that. How do you know which is which? You don't. So you have an order on either side of the candle, and as soon as it's triggered, you put your stop at the other side. And it's that simple. And what it does is, from that level to that level, from there to there is your risk, and you're looking to equal that as a 1-to-1 on the other side direction of the candles. That is a simple strategy, my friends. Try it. It works on most time frames. Personally, I wouldn't really look at it less than an hour, but there are lots of different ways you can determine which direction that's going in and start adding layers, which again comes back to planning and preparation to make the trade a little bit more viable. In other words, fine-tune your entry. Story for another day. But these are the things I do all the time. So let me get rid of this. Right. So that was a basic strategy. All right. There's many ways you can sort of add to it and make it better, and you'll find all of that through the videos if that's what you're looking for. But do pay attention to the money side of it. There is a hierarchy of money management. And what I mean by money management is each part of the elements helps the next one. And it's like it's just a circle, constantly rotates. And it works like this. So the first part of it is your bank. This is how much cash you actually have. It's how much cash you have to use. Now, if you've only got a small amount of money, you have no option but to deal with cheap products. So for argument's sake, if you're on, I don't know, say you got £200 to start with, seems to be the golden figure. You can trade, and there are certain products out there that will give you good bang for your buck. Gold is easy to get into market. It's very cheap. The FTSE is relatively cheap. There's a few Forex pairs you could probably get into. But that's because it's controlled by the amount of money you have. And why is that? Well, because brokerages set what's called a margin, which is the next part. So the bank controls the margin, and the margin, oh, wrong. It's not real. It shouldn't be that. And the margin controls the product. Because if you can't afford it, you can't trade it. Simple stuff. You know, so like I say, that could be gold, FTSE, whatever, like I've just been saying. Once you've figured out what that product is, the next part of it is you need to work out what the risk is. The load bearing a point on your account. Because for argument's sake, if you've got a product and it takes £195 of margin on for your 200, all you've got left for your risk is a £5. You have nowhere to go with it. Now the brokers I use, cheapest sort of, well, let's say gold, 50p, I think is the cheapest it'll go. So that's a 10 pip stop. It's nothing, you know, so you need to work out your risk in proportion to the product you're going to trade. Ideally what you want, if you're on £1 a point, you want to be left with about £40 in your account to give the trade a fighting chance. You know, because otherwise you're just going to get a margin call and they're going to shut your account position and you lose your money. So the risk has two parts because it actually determines not only the trade, but it also determines the bid size, the position size. All right. And once you've kind of coming down this hierarchy, so you've worked out your £200, you've found a product that can safely fall in margin criteria, and you have enough money left over for your risk tolerance. The risk tolerance is now told you can trade it, and it's giving you an idea of what the bid is. And why is that? Well, it's very simple. If you need just easy figures. Your £200 cost you 150 to get into it. You want a 40 pip stop. Well, that's a pound a pip. Simple as that. That's because you're assuming you're going to risk 40 quid. All right. If you think that's too much, you can look at the next size down and say, well, it's 50p. And you drop your position size down, just so that it's not as painful, shall we call it. All right. Because when you're first starting, you're going to be putting a lot of strain on your account. You have no other choice. And it's just simply because it takes money to make money. And if you've got very little, it's going to be hard work. Just like it is when you're starting your life. It is hard work for little money. But as you get better, you build up your bank account, you build up your possessions, life gets easier, of sorts.
No way!
So once you've figured all of that out, the bid size and the trade can determine the profit. Very, very simple. I think the market is going to go to X. Bid size to that point gives you your profit. Now, why am I not talking about risk reward and things like that? Because I genuinely don't believe in it. I think it is the ruin of most accounts. Because what happens is, if you have, say, a 40 pip stop and you're trying to force a 2 to 1, that means you're trying to get 2 times more, which is fine. What if the market can't give you that? What if it can only give you 30 pips? Are you better off being conservative or risky? I'll let you think about that and drop some comments below. To be interested on your thoughts. Me, I look at risk and profit taking completely separate. They have nothing to do with each other. One protects the account, the other one pays the account. And they are completely separate. They're not symbiont at all. All right? And that's what makes me consistent, because I plan it out. The other part of it is I never enter a trade unless I'm pretty certain I'm going to win it. If I don't think I'm going to win it, I just ignore it, wait for the next one. Simple as that. I'd never chase the markets, guys. So we've got our profit, and the profit ultimately gives you your goal. And your goals are the things that you want in life. You know, you want a car, a holiday. Might even be something as simple as a t-shirt. But it all comes down. And then once you've completed the task, you go back to the top and you work your way down again. Simple stuff. I mean, if it was a house, it would look like this. That would be your bank, foundation. Your margin would be the walls, contain the trade. Your risk is your floor and ceiling, because it depends on how much risk you've got to play with as to how big a house you have. If you haven't got a lot of money, you're in a flat. If you've got a lot of money, you've got a 6-story mansion. Then your profit is the roof, and the stuff you put inside the house is your goal. Simple, simple stuff. And that's kind of how I work things out. I try and visualize them as something. And to me, it's a house. I need a foundation, I want solid walls, I want a floor and a ceiling, and I want a good roof. And then when I've got all of that, whatever's left, I can get my treats. Simple, simple stuff. And these are the things that run through my mind. Now, I know a lot of you will walk away from this and go, I don't get it. What is all that about? The idea of this video is to get you to think about your trades more constructively. In other words, don't overstretch yourself, because if you've got next to nothing in the bank, how on earth are you going to afford? Well,
You ding dong!
you're not. Stupid, you know. What you need to do is build up that bank, and you have to do it carefully and slowly. If you go at it hell for leather, you'll just blow your account up and you'll be back to square one every other month. And it's a nightmare. It really is. Plan it out. Look at your bank first. See how much you've got in it. At the start, you're going to put a lot of stress on it. But as you build up your account, your risk percentage will come down. And your margin, well, just opens up new opportunities. Those new opportunities give you better profits because certain markets accelerate quicker than others. For argument's sake, I started with gold. Gold to me is a slow market. It doesn't move that much. So it might take me a little while just trading gold, but I could trade it up till I'm at a point where I could say trade the DAX. Now the DAX, if you know what you're doing, can pay you very well every single day, but it takes time to build up to that. So that's kind of my wishy-washy way of looking at money management. That's why I run everything on a spreadsheet. My spreadsheets work out what my maximum risk is, which tells me how much my bid size is, and then the market structure tells me how much profit I'm going to get out of it. All of this sort of stuff. So I hope that all made sense. By all means, drop comments below or even contact me. Very amenable. I answer every single person that gets in touch. And you'll find all my details and a number of links down in the description below. So trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.